Hey, welcome everybody to another webinar series brought to you by IronFX. All right, so just to make sure, are you guys able to see my screen and also to hear me clearly and see me clearly? Just wanted to check with you guys if everything works fine. Okay, just feel free to type it in the chat box if you are able to um, see me and hear me clearly, as well as see my screen. All right, that's great. Okay. Okay, let's wait for maybe a couple of minutes before we begin the session, all right? So that everybody will be able to catch up on this webinar. Okay. Okay, I think most of the participants are already in. All right, so let's just begin the webinar. Okay, so before I begin today's webinar, remember that everything in this video is educational in nature and nothing should be construed as investment or trading advice. All right, so please do remember to do your own due diligence before you guys trade. All right. And I'm your host for today. My name is Boon Hong, and I'll be going through today's webinar of MACD Masterclass. Okay, so the agenda for today, firstly, what is the MACD? All right, then the second thing is how can we interpret MACD? Third will be MACD trading strategies. And fourth, combining MACD with your own trading strategies. All right, so I'll be sharing with you guys on how you can actually um, use MACD together with your own strategy. And I'll be showing you guys a simple strategy that I use for myself together with MACD. All right, so basically, what is MACD? All right, MACD is short for moving average convergence and divergence. All right, so it is a momentum indicator, which is mostly used in trend following scenarios. So for example, if previously, I think for before Trump election, right, gold was actually moving in the upwards direction, right? It was always bullish. So I think for MACD itself, it was good to use this indicator as it was following the trend, which is a bullish trend. All right. Then the next thing is crossover of MACD triggers buy and sell signals. All right. So for those that actually use MACD before, if you realize, right, MACD uses the crossover to indicate whether it is a buy or sell. Okay. So what are the components of the MACD? All right. So I'll mention the components and then I'll show you guys what is it. Okay. So for MACD indicator, it has four components itself. Right? We have firstly the MACD line, which uses the 12 EMA as well as the 26 EMA. All right. Then we also have the signal line, which is the 9-period EMA. And this is the one where when you see a crossover, right, then it is either a buy or sell. Right. Then we have the histogram. The histogram is basically showing the strength of how many people are actually buying, how many people are actually selling, right? To put it simply. All right. And then the zero line. Okay. So this is the look of the MACD itself. Put it, when you put this indicator into trading view, right, you can see we have the blue line, which is the MACD line, all right, and the signal line. Okay, these two are essentially the most important ones, right? To indicate whether it is a buy or sell signal. Okay, then we have the MACD histogram, right, showing the strength of whether it is bullish or bearish, and then we have the zero line. All right, the zero line is basically just to separate this histogram. Okay, so how to tell whether it is a sell signal or a buy signal? All right, so for a sell signal, right, the MACD, which is the blue line, right, has to cross over the signal line, right? So we can see right here, yeah, oh sorry, cross below the signal line. Okay, it has to go below this orange line to indicate sells. All right, then what about buys? Buys, simply put, it is the crossover of the signal line. Okay, so the blue line has to be above the orange line. Very simple stuff. Okay, so for MACD trading strategies, um, so basically it is a lagging indicator. Simply put, if you were trading it live, right, you'll see that it'll take some time before it crosses over. So that's why it is a lagging indicator. Then sometimes it has fake signals as well. All right. Then we have to look at the crossover strength, right? How strong is the crossover, right? Later on, I'll show you how to differentiate the strength of the crossover and also looking for potential reversals. Okay, so for the MACD trading strategies, this is a buy entry. Okay, so looking at this area right here, right? If you put aside your horizontal levels, you are only focusing on MACD, right? Although it is not recommended, but this is for example purposes, right? You can see this, once you see the blue line crossing over the orange line, right? And then we have consecutive bullish candles, right? This is a sign of a buy entry. Okay, then similarly at this area, right here, we can see this a buy entry as well, based off the crossover only. Okay, so if you base off the crossover only, right, you can see there are many crossovers right here indicating many buy entries. Okay, then this is considered a weak buy entry because the distance, how to tell whether it is a strong buy entry or a weak buy entry, is the distance between the blue line and the orange line itself, right? The bigger the gap, shows the strength of the crossover. All right, you can see right here, the gap is so small, it's almost insignificant. So usually, I wouldn't enter buys over here. I would rather enter buys over here, right? Then we can see the last example is this buy entry over here. Okay, so what about sells? Sells, simply put, is the blue line crossing below the orange line. Very simple stuff. It's just vice versa, right? Then you can enter sells over here, here, anytime where there's a crossover right here. Okay, here as well, right? You can see there is a short-term sells over here. All right. Then you can see there is another significant crossover here as well as here. But here, you can see right here, once it cross over, cross below this orange signal line, it cross back above, right? So this is considered a weak signal. Okay. Okay. Then the next thing is, when do you know how to exit your trade itself, right? So let's say you enter a buy entry over here. Okay, so you look at the crossover, so you align the crossover with the chart itself, you enter a buy here, right? And this is your support level. Okay, so when do you exit? The recommended exit position, right, is at the next high, next swing high, or when it starts to cross back into the orange signal line. Okay, so these two, I repeat myself. Basically, you are exiting a buy entry if the price crosses back into the orange signal line, or you exit at the next swing high position, right? Because I believe that once you exit at the next swing high position, you're already achieving a 1:2 or at least 1:3 risk to reward ratio, right? And that is good enough. Okay. Then for sells, right? If you sell right here, okay, once price starts to cross back, okay, you can either exit here, which is around this area right here, or you can exit at the next support level. Okay, this support level is identified by this overlap pullback support level right here, right? If you look at this past resistance level, okay, then you draw one line over here. This is your pullback support level right here. Okay, then the next example is right here. You re-enter the cells, right? Let's say you already exit here. You re-enter your cells because you see another crossover right here. All right. And it has been closing below this support level. Oh, sorry, below this support turn resistance. All right. Because previously it was a support and then it broke. Now it's a resistance, right? And it's closing below this resistance level and below the orange signal line. So you enter cells here. Where should you exit? Exit at the next swing low support, which is this level over here. Okay. Or you can wait for a little bit more for it to cross back into your signal line, which is roughly around this area right here. All right. But my recommendation is to exit at the next swing high or swing low levels. Okay, so how do you combine MACD with your own trading strategies, right? Firstly, you identify the trend, whether it's a bullish trend or a bearish trend. All right. Then the next thing is you have to always mark out your horizontal levels because these are your most important levels, right? Which are your support and resistance levels. Or for example, some of you might use supply and demand, right? These are your key levels that you have to mark out. All right. Then you identify the crossover strength, okay, as well as any potential reversals that might happen. Okay, so let me just jump to the chart itself and show you guys an example. Okay, give me a sec. Let me see. Okay. Okay, so far, anybody have any questions? If no questions, let me just show you guys how to use it on a chart itself. Okay, so if I were to use it on GBP USD, okay, the first thing is identifying of trend, right? Remember how to apply this to your own trading strategy. First, identifying of trends. Second, SNR means support and resistance levels, all right? Okay. Then the next thing is crossover strength. And the last thing is any potential reversals. There's continuation. Okay. These are the things that you will have to remember. Oh, wait, let me just put it. Okay. So looking at let's look at H4. Okay. Let's look at H4, right? The first thing that we will be looking at is the overall trend, right? Overall trend, we can see that it has been making higher highs, higher lows, higher highs, higher lows, higher highs, and now is consolidating, right? So we can identify that is a bullish trend. And what we want to do is stick to buys only, okay? Then the next thing that we will have to do is to mark out our horizontal and resistance levels. Okay, so what we will have to do is to mark out our levels. So our levels is right here. This is our support. Okay, Then our resistance levels is here. Okay, where is my next resistance level? Which is here. Okay. Okay, so very simple stuff. We have marked out our first support, second support, first resistance, and second resistance. Okay, so what's next? Right, we already missed a buy opportunity right here because if you look at this area, right, it aligns very nicely with, we already have a crossover right here, okay, and it closed above our first support. So generally, if I were to enter here, I will have entered on the next candle, okay. Stop loss, you can, to play it safe, you can put it right here at the previous low, right? And your target is the resistance level, or you can put it, if you go to H1, right? You can put it right here at this previous low, okay? You can put it over here, right? Roughly about 37 pips, okay? Then your target, you can now reduce your risk to reward ratio, which is 1:2.58, okay? Why, remember when I said to exit either at the crossover, right, or at the next swing high slash swing low levels, okay? Because it only makes sense, right? If you look at this chart over here, right, it has been above this signal line, so it's okay. We can enter buys over here, right? Then let it run. Don't panic. You know, sometimes people panic when it crosses over and then it goes back to your entry or you're in drawdown, right? But usually for, if you keep doing this, right, based on my testing, if you keep exiting based off this small little crossover, and then because of your drawdown, right, then you will never be able to profit in the long run. Okay, so you just set this sorry, you just enter this trade and set this target, right? Then focus on where should your take profit be. Okay, your take profit should be at the next swing high resistance, which is this level. Okay, or when, let's say if price is around here, right, it crosses back, then you can shift your stop loss to break even. Okay, so one tip that I can share with you guys is, if let's say price is already at this level over here, right? And then you align. Wait, let me align this. Okay, and then you see, oh, we have price is still above this signal line. So what you should do is to shift your stop loss to break even, or you can close 50% of your trade and let the rest run. Okay, so don't panic. Usually what I'll do is to just leave it to run. So it's something like a set and forget strategy. Okay, then the best thing is, if, let's see, let's see if we have any other confluences as well. If I were to draw a fib, yeah, you can see right here, if I were to draw a fib, right, this is the 161.8% Fibo extension level, right? Meaning that there is a high chance for price to come to this level and then reverse back down. Okay, so at this point is where you want to close most of your trade, or at least close all of your trade. Okay, let's see where price is at now. Yeah, yeah, even though price actually come all the way to the second resistance level, but there is also a possibility for it to come back down to this first support level, right? So my suggestion is to close 80% of your trade here, right? And let the rest run towards your final take profit target, which is this second resistance level over here. Okay, it's pretty straightforward. Like if you combine MACD with your own trading strategies, right? It's quite straightforward and simple enough, right? Don't have to have so many confluences, right? It will only confuse yourself, right? Because sometimes I have people asking, why don't you use stochastic together with RSI and then MACD, right? So you have like one, like let's say you have let me show you an example. Let's say you have RSI, then you also have stochastic, right? You have literally all three of these together with your chart. Okay. So if you see a crossover here, uh, RSI is still lagging behind. RSI crossover first actually, right? And then you can see stochastic actually cross over almost at the same time as RSI, right? So if I were to align all these together, right, it will only confuse you even further, right? So I would say you don't have to use so many of these. Just focus on using one together with your horizontal levels. And if you guys use Fibonacci levels, right? These three are good enough, right? For myself, I only use RSI and maybe MACD as confirmation, right? I realized that this works better with stocks instead of FX, right? Based off my own experience. But if you do your own testing, right? Uh, let me choose another pair. Okay, wait, okay, let me show you guys another pair. Okay, you see sometimes we have false signals over here. If I were to show you, yeah, if I were to show you this level, right, you can see at this area, right, we have a very nice crossover here actually, right? Right, you guys can see we have a crossover below, right, which indicates a sell. But if you look at the overall trend, right, why would you want to sell, right? So there is it's not a it's not a good idea to only use MACD and not any other confluences. Okay, so if let's say price is here, let's say price is here, right? You mark out your resistance level. Oh, this is nice. Yeah, this is your first support. And then you have your second support, and then your next resistance level is roughly about here. Okay, this is for EU. All right, then you can see it's such a strong uptrend, right? So you want to stick to buys. You wouldn't want to sell, right? You're only going against the trend if you try to sell over here based off the MACD crossover. Okay, you only want to enter sales if price actually broke this low. All right, price actually broke this low, right? Then you enter off this level over here, right? Oh yes, okay, sure. Uh, yeah. So if you look at all these, right, the first thing that you have to do is to identify the trend, and then you mark out your levels and see if it makes sense. Even if MACD is the last thing that you want to look at, right? MACD is the last confluence that you want to look at to enter buy or sells. Okay. So let's take a look at NZD USD. Okay, NZD USD H4 chart. Uh, First resistance. Okay. most likely NZD USD will be bearish because previously uh we have already broken this level right here. Okay, so now possibly price could make short-term sells all the way to this level over here. So we might want to focus on sells, right? If you look at, yeah, oh, okay. So we already have a close below this low. So we are looking at sells right now. Okay. So right here, wow, my next support is pretty far. Wait, let me see. Support. This is my resistance. Oops, second resistance. Okay. Okay, so now let's take a look at how we can possibly enter NZD USD at its current price. Okay, so looking at MACD, MACD is still below the signal line, right? And the histogram shows, but the histogram itself shows a weak bearish movement. Okay, but we are looking at lower low, lower high, lower low, lower high. Next thing is lower low. Okay, so if you want to enter NZD USD, let's take a look at the H1 chart. Okay, then what I'll do is I'll mark out my fib levels. Let me see. Yeah, I think at this level will be nice. Okay, most probably price will come and take out this high and then enter off. We can enter off this 8.6% Fibo retracement level. Okay, and then we can. So ideally what I'm looking at is right here. Stop loss placed above this high, 20 pips. Okay, then your TP is roughly here. Or you can target lower for a 1:2.39 risk to reward ratio. Okay. So far, I think NZD USD, yeah. Let's see how it reacts to this level. Okay, 15 minutes. Okay, I think, yeah, this is fine. Let's see, because on H4, we are still looking for cells. Okay, so ideally we want to look at we want to follow the trend. Okay, I believe that the NZD USD is currently in a wait, where's my is currently in a bearish channel right now. Okay, so it's either it reacts nicely to this bearish channel or it actually breaks above. Okay, so there is a possibility for both, right? So we can look at MACD as an indicator, right? If MACD crosses back up into here, right? We have, let's say, the blue line crossing over the orange line, blue line crossing above orange line, right? If we have the blue line crossing above orange line, then we don't want to look at cells anymore, right? Because there is a possibility for it to break above this bearish channel and go higher. All right, let's take a look at daily. Yeah, daily still within this range, right? Possibly could come down even lower. But let's see how it reacts to this area. Okay. So NZD, yeah. If you realize NZD, USD, they actually react quite uh quite effectively on channels. If you look at all these, wait, let me show you guys. If you look at this area, right? Break above, come down, bullish, right? So it could possibly do the same movement right here, right? Bullish, bearish, bullish, right? Then from here, we will have to look at this MACD line already. Okay. If it happens to have this, then we will not sell NZD USD. Okay. Yeah. Johannes, I hope it answers your question. eh, for NZD USD. NZD USD actually is quite slow, I feel. Yeah. Let's take a look at maybe GJ. Okay, let's take a look at GJ. Uh, okay, previously I was looking at this area right here. Where is it? Okay. Um, yeah. Okay, so I was looking at this level over here, right? So I actually highlighted this whole thing, right? Yeah. This okay, so using my own strategy, right? I actually highlighted this area, right? This is a level where it is a FVG. There's a fair value gap over here, and it aligns with my 75% fit level. Okay, I use the 75% because it like I just like 75 over any other fit level. Okay, then right here, price created a new high, which is here, right? So it is confirmed bullish, right? Then I look at, so I place a entry here, stop loss below this low. All right, I know it might seem like a lot, 108, 109 pips, right? My target is essentially 321 pips. Okay, then you can see right here, there is a confirmation of MACD crossing over the signal line, which indicates a buy, right? Even though my entry was right here, okay, before it crossed over, right? But then when once price closed above this fair value gap, I saw that there is a crossover for MACD as well. All right. So this gave me the confidence, right, that the price would continue to break this high. The first target was this high actually, like these equal highs. These equal highs were definitely going to be swept, right? Then the next target, if it gets swept, right, then the next target will be this high over here. Okay, of course, you know, once price rejected this level, I was afraid that it might come back to my break-even level, right? But I actually closed about 30% of my trade over here and shifted my stop loss to break-even once price reached this high, right? And then along with that, I can see, oh, all the buyers are actually coming in, so I wouldn't have to be afraid of it coming back to my break-even level, right? So MACD is a good indication of whether it is a buyer's market now or a seller's market now. right? Based off this histogram along with this crossover, right? Because for MACD, right, this is something like the volume indicator, right? Whether showing the strength of price, like current price right here, right? You can see the higher these green candles are, these green bars are, right? Means the more bullish it is. Okay, then yeah, that's why. Oh, there's a just now I was a bit afraid of this level, right? Because if I were to go to 15-minute, right, I can see that while price actually crossed below this signal line and is starting to show the red histogram. So at this area, right, I was afraid that price might continue to consolidate, right, and then come down. Yeah, but surprisingly, the buyers came in, right, entered off this consolidation phase, and then we are heading towards take profit already. Okay, so this is maybe you can literally combine it with a lot of trading strategies. Like I realized that it works very well with breakout strategies because essentially for breakout strategies is more of continuation, right? And then MACD works very well if it's a trend-based strategy, right? If you trade reversals, it's okay also, right? Just that you have to be careful of when the crossover happens, right? You cannot just rely on the crossover and then say that, oh, the crossover already happened, means that price is going to reverse to the upside, right? But you have to align it with other confluences as well. Okay, so yeah, don't just rely on this indicator. Yeah, if you were to look at this area, right? Very strong downtrend. You see, downtrend all the way, right? Then when did it actually reverse? Okay, it reversed at this level over here. Let me see. Yeah, this is a strong level, right? Then if you, let's see, if you add in, let's say you add in RSI, let me see. Yeah. Oh, there's no divergence. Wait, let me see. Crossover. Yeah. Okay, you see this area right here, bearish movement, but then right here at this level, price failed to break this low. Okay, this level, right? Price failed to break this low. Okay, and then what can we see next? We see more of this green histogram. Okay, and then we see a crossover literally happen right here. Even if not here, right? This was the optimal entry, right? But the crossover haven't happened yet, right? It was not. If I were to zoom in, right? If I were to zoom in, I can show you guys, right? The crossover haven't happened yet at this optimal price, right? It only happened, right? Maybe 2 candles after, right? But of course, this helps you to ensure that, all right, since price closed above this demand zone, right? We have the crossover, okay? How should you enter the trade? You should enter the trade long. Stop loss placed slightly below here, right? Even though it's quite a number of pips, but your target, so long as your next swing high target is 1:1, all right, and then your final target is 1:2, I would say roughly about here, because this is a valid area. Okay, initial target is to make sure where should you break even, okay, which is this swing high resistance level. Once it close above, all right, give you more confidence that it will continue to rise up to this final target over here. All right. Personally, I wouldn't even hold all the way to this high right here. I'll just hold probably to this level. Yeah. So you can try MACD and see how it helps you with your entries and stuff like that, right? Focus on the strength of this histogram, right, as well as the crossover, right? Sometimes when you are trading, let me see, let's say we use for gold. Okay, gold. Okay, gold is a little bit choppy now, right? You can see right here, okay, if I were to go here, okay, let's say price is right here. This is my first resistance. This is my first support. Okay, this is my second support. Okay, then this is my next resistance level. Oh, this is such a nice resistance level. Okay, okay, so from here, how should you enter? Initially, I would enter sales, honestly, right? If you look at price here, because once price breaks past this level, right? What you want is to look at what you want is for price to continue bearish, right? Okay, so but we are waiting for it to retest this level over here. Okay, so let's see if it actually does retest. Okay, in the end, it doesn't retest, it doesn't close below this first resistance. Okay, then now it goes back into this range, right? So one thing that you have to realize, one thing that you have to learn is that once we have a consolidation zone, right? Price breaks out of this and goes back into this consolidation zone. This is a fake out. Okay, so once it comes back here, what you're looking at is for entries, buy entries, okay, to continue to this level over here. All right, so once it is at this level, we are waiting for a MACD crossover. Okay, let's see. Yeah, so we got a MACD crossover. We can wait for the next candle close. Okay, so we enter at this candle, right? Stop loss below this previous low. Target right here. 1:1.82. Then you see how it plays out. You'll see some consolidation here and there, and then finally it almost touches your TP area right here. Okay, so if I were to go back to here again, right? You focus on the MACD, right? You're on the H1 chart. You see the MACD crossover already, and you see green histogram forming, right? Then you want price to close above this first, it has now become a first support, right? Then this is now your second support. Okay, looking at price here, looking at price here, all right, you look at this candle, okay, is MACD crossover, price above this support, okay? Then you enter when price reaches this first support area. So it is this level over here. You can also go to, I think, 15 minutes and see whether we have a nice MACD crossover. Okay, 15 minutes. Oh, yeah, 15 minutes too noisy. Okay, I would say max 1 hour is the one that you should look at. Okay, 15 minutes, there's too much noise, right? This is still okay, right? We have a crossover right here. price retested already, then you enter target this high over here. Okay, right now gold is still a bit choppy, so let's see how it goes. Uh, yeah. Okay, so far, anybody have any questions? Okay, no questions. Things should be fine. MACD is pretty simple and straightforward. I think honestly is I feel that MACD is better than RSI. But if I were to show you how to use it for stocks, okay, let's just use Palantir. Okay, while Palantir dropped so much, okay, let's try it on a stock. Uh, okay, okay, right here we have a very nice support level over here. Okay, let's say pre-market you're looking at this, all right, and then you see, oh, we have a very nice crossover right here, so it aligns nicely. Okay, and we have a nice demand zone over here. Okay, so once price is at $79 per share, right, what we are looking at is to enter off, this level. You can see how it closes above this demand zone, right? Then we have the crossover right here. Okay, this is why I say sometimes, MACD is a lagging indicator, right? It had to form three candles, right, before it has the crossover, right? And then if let's say it formed three candles already, right, price is already at 85. You couldn't catch the one at 79.85, right? So I would say enter off your horizontal levels first, right? And then see if MACD gives you the confirmation as well, right? If MACD also gives you the confirmation, then of course uh it'll be good to continue holding on to the trade, right? But if MACD crosses below, right, then it won't be a good sign to continue holding. Okay, so I would say MACD is a indicator to give you extra confluence on whether you should continue holding onto the trade or exit the trade. Okay, so yeah, if I were to enter this right here, my target at the body right over here. Yeah, something like this, right? This is for stocks. If you day trade stocks, right? Yeah, this is something that you might want to use. I think maybe it's okay for stocks. RSI works well with stocks as well. RSI, MACD, yeah, these are the ones that works well with stocks. And then for FX, usually I just use RSI and all these horizontal levels. MACD only sometimes, right? And for extra confirmation, whether it gives me yeah, the confirmation that I want. Oh no. NZD USD reverse from this level. Okay. Let's see. UJ. Okay, we still have some time. Maybe let's do UJ last. Right, then let's see. Then we will end off the session. H1 chart. Okay. See first resistance, second resistance. It's fine. We can just try it like that. Okay. Oh, yeah. So, we missed the buy entry. So far, UJ is doing very nicely, right? Um, Price is still above this signal line, means it's fine, right? Then we have all this green histogram, right? And then we have a retest of this breakout. Most probably, UJ would have been a trade like this, and then the target right here, 1:1.86. Yeah, I'll say UJ will most likely recover all the way to this level over here. Because if you look at there is a there is a technique, right? So let's say we have something like this. Low low, low high, low low. Then we have smaller lower highs and lower lows. Then we have something like this. It just looks like a bowl, right? Then we have higher high, higher low, higher high, higher low, higher high, higher low. So this is just one of the example of a market cycle. Something like this. Low high, lower low, lower high, lower low, lower high, lower low. Then like a bowl, right? Then this is where it start to higher high, higher low, higher high, higher low. Something like that. This is exactly the same thing as what UJ is doing now. If you look at the H1 chart, right, you can see this is what it's doing right now. Okay, yeah, so my advice is to go to use MACD as an indicator to as a last confirmation, right? But of course, you still need to master your other confluences as well, such as your horizontal levels. Maybe if you guys use Fibo, right? Then include MACD as your last confirmation. It's not really cup and handle. Cause cup and handle is something like this, like that, and then like this, right? But this one, right, is more of like a market cycle, like lower high, lower low, low. Sorry, lower low, lower high, lower low. Then we have all this consolidation right here. Then we have this break of this high, which creates this higher high, higher low, higher high, higher low, higher high, higher low. Yeah, so it will generally continue up until here. Gold sometimes like to do this also, but I see it more often in UJ and GJ. Yeah, this pair, like you see, like something like this, uh, like this, right? Then we have this curve. Then it suddenly starts to go up. Yeah, very very similar. Uh, yeah, gold not really lah. Gold so far not really. Yeah. So you see, let me see. Yeah, just to sidetrack a bit. Uh, yeah. Okay, yeah. So maybe when you guys are free, you guys can practice using MACD. I think MACD is quite a good indicator, honestly, compared to all the other funny indicators, right? Like some people use volume profile and all that stuff. It works, right? It works, but I would say to keep it simple, MACD is like very, very straightforward. You see, you mark out your levels, break and retest. Just trade with the trend, right? Try to avoid reversals. Usually I just trade with the trend. I see, oh, uh, we already have a reversal over here. So what I want to do is look for buys, right? Look for buys, very simple stuff. We break this high, what are we looking at? Buys. So then we open MACD. Oh, MACD, histogram green, MACD line over signal line, right? Then we enter buys, right? Very, very straightforward. Okay, yeah. All right, so yes, that's all from me to you guys. I hope that you guys will be able to practice MACD and then add it to your trading strategies. Yeah. Oh yeah, for those that did the previous live training session, I'm trying to do a series. Yeah, yeah. Yeah, I'm trying to do a series whereby um I'll teach you guys okay, so basically we will have a four-step plan. Okay, so this is webinar 1, webinar 2, webinar 3, webinar 4, and then all these, right, all these webinars will equate to a four-step plan in the end. Okay, this four-step plan, you can use it, it's the only thing that you need, right, to trade, right? So because I realized that even if I teach you guys all the different topics, all the in-trend topics and all that, right, you will only be more confused, right? What you guys might need, right, is uh is a structured trading plan, right, that help you guys to, you know, trade on a daily or weekly basis. Like you just use this four-step plan every time you enter a trade, right? Even if let's say this four-step plan, right? Why I say four-step plan is because, okay, if let's say you have 100%, let's say you, okay, let's say you have 100%, right? Step 1, step 2, step 3, step 4, everything done up, okay? Then you see that, oh, this trade aligns with all of the rules, right? 100% of the rules, okay? This is a A plus setup, okay? But what if we have like only maybe 1, 2, and 3, right? That is 75%, right? It's still okay, right? But anything lower than that, we wouldn't want to enter any trade, right? So what I want you guys to, you know, this to help you guys in the future to have a structured trading plan. And then yeah, so the idea is because we have 4 different rules, right? These 4 different rules will teach you about market structure, liquidity, and then fair value gap and FIBO, right? Yeah. And then after all this, I will show you the whole step process on how you can implement these 4 rules into your trading plan. Yeah. Sounds good. Yeah, I'm still trying to plan it out with the the company, right? So yeah, if it sounds good to you guys, then I will implement this and then maybe you guys can join and learn together. Yeah. Yeah. So if that sounds good to you guys, right? Then yeah, I will try to push this faster so that we can start 2025 well, okay? Yeah, because I feel that everybody needs, even for myself when I just started, I was looking for a structured trading plan, right? Then when a lot of new knowledge come to you, then you will think like, oh, maybe I should change my trading strategy because mine is currently not working. But it's not that your current trading strategy is not working. It's because you haven't used it enough to know whether it works or not, right? So yeah, that's what I want to share with you guys. You only need one trading strategy, or rather a structured trading plan, and then use it for life. That's all you need. Yeah. And this plan, you can use it for most of the pairs, even for gold, right? You can use it for gold, you can use it for the majors. Minors, not really, right? I will share with you guys more when the time comes, right? Which pairs work the best, which pairs don't work as well. Okay? Yeah. Yeah. So yeah, hope you guys hope that I will be able to share it with you guys soon. Okay. So that's all from me to you guys, and I hope to see you guys soon. I think I have a, let me see. Yeah, I think the next one will be next week, the live training session. So I'll see you guys next week. All right. Take care, trade safe, and stay safe, everybody. All right. I'll see you guys next time. Bye bye. No worries. Welcome and thank you guys for joining in today's webinar. All right. See you guys next time. Bye bye.